Welcome to The Explainer. So, if you own a car in Texas, you know the cost can feel just insane. Today, we're going to break down exactly why that is, and more importantly, give you a real practical guide to lowering your bills. And hey, for all the nitty-gritty data we'll be talking about, you can find everything at the links right below this explainer.
All right, let's just jump right in, shall we? Because if you're a driver in the Lone Star State, you've probably felt it in your wallet. Owning a car just seems uniquely expensive here. So what is actually going on?
Okay, get this. Right off the bat, Texas drivers are paying anywhere from 10 to 20% more for car insurance than the national average. And honestly, that's just the tip of the iceberg. This number is a huge clue that there are some much bigger things happening here that are driving up costs for everybody.
So here's the plan. First, we'll get into why your Texas car costs more. Then we're going to talk about how to slash that insurance bill. After that, we'll look at finding a cheaper loan. And we'll wrap it all up with a money-saving playbook you can start using today.
Okay, Section 1, why your Texas car costs more. And really, it all comes down to what you could call a perfect storm of high prices.
So when insurance companies look at Texas, they see a whole list of red flags. I mean, think about it. You've got severe weather like hurricanes, hail the size of golf balls, and tornadoes, a lot of them. Then there's the fact that Texas has the second highest vehicle theft rate in the entire country. On top of that, you have these huge, dense cities in some of the highest speed limits anywhere. For an insurer, this whole mix just screams high risk. Now, this is something every driver needs to know. It's the state's minimum liability rule, often called 30-60-25. But here's the really important part. These numbers are just the bare minimum to be legal on the road. They are not designed to actually protect you financially if something bad happens. And this quote just hits the nail on the head. That $25,000 for property damage, it sounds like a decent amount, right? Well, it can disappear in a flash. Imagine you cause a crash and total someone's brand new $50,000 truck. Your insurance pays that first $25,000, and then you are personally on the hook for the other $25,000. That's a huge risk to your savings, your home, everything.
Okay, so with all that in mind, how in the world do you fight back? Let's talk about cutting your insurance bill. And we're going to start with probably the single biggest factor, and it's one you might not expect at all.
Yep, you're seeing that right. In Texas, your credit score is one of the most powerful factors in what you pay for car insurance. I know, sounds weird, right? But insurers use it to predict how likely you are to file a claim. So a better credit score can directly lead to a much lower bill. Honestly, working on your credit can save you more money than almost anything else. Okay, now just look at these numbers. This is where it gets really eye-opening. A driver with excellent credit, we're talking 750 plus, might pay around $249 a month for full coverage on a new car. But look at the bottom row. Someone with below fair credit could be paying over $700 a month for the exact same coverage on the exact same car. That's nearly triple the cost. It's just a massive, massive difference.
Of course, your strategy should change depending on if your car is new or used. For a new car, your lender is going to make you get full coverage. No way around it. And you should seriously think about getting gap insurance. It covers the gap between what you owe and what the car is worth. But for used cars, here's a great little trick. The 10% value test. It's simple. If your yearly insurance premium costs more than 10% of what your car is actually worth, it might be time to drop full coverage and just go with liability. You could save a bundle. All right, beyond your credit score, here are some quick wins. Bundling your home and auto insurance is a no-brainer, usually an easy 10 to 25% off. Raising your deductible from, say, $500 to $1,000 can slash your premium. Just make sure you have that grand stashed away. But listen, if you only take one thing from this slide, let it be this. You have to shop around. Compare quotes from at least 3 different companies. Never, ever just renew your policy without checking. You could be leaving hundreds of dollars on the table. Okay, so that's insurance. Now let's tackle the other big piece of the puzzle, your car loan. And you're going to see that the same rules apply here. It's all about your credit and shopping around for the best deal. This chart really tells a story, especially for a used car loan. If you've got fair credit, you can see that dealership financing is often the most expensive route. But look over at the credit unions. Time and time again, they come in with the most competitive rates, beating out the big banks and the dealer's finance office. So here's the bottom line. Your game plan for getting a loan really depends on your situation. If you're buying a new car and you have absolutely stellar credit, like 750 plus, the dealership might actually offer you an incredible rate.
But for pretty much everyone else, and especially if you're buying a used car, your very first stop should be a local credit union. They are consistently tough to beat.
All right, we've gone through a ton of information, so let's pull it all together into a simple step-by-step playbook you can use to save some serious cash. And here it is, 4 simple steps. 1. Check your credit score first. You gotta know where you stand. 2. Get pre-approved for a loan before you even set foot in a dealership. This is your leverage. 3. Get quotes from different places, a credit union, a bank, maybe an online lender. And 4. Choose the shortest loan you can comfortably afford. A shorter loan means way less interest paid over time. Seriously, walking into a dealership with that pre-approved loan in your back pocket, that's the ultimate power move. It forces them to earn your business.
You know, when you boil it all down, after all the tips and tricks, it really comes back to these 2 incredibly powerful things. First, improve your credit score. And second, always shop around. These 2 actions will save you the most money on both your insurance and your loan, period. So I'll just leave you with this question. Are you accidentally leaving hundreds or maybe even thousands of dollars on the table every single year? Because a couple of hours spent checking your credit and getting a few quotes isn't just a chore. It's an investment that can pay you back big time, year after year. And hey, if you want to see the very latest rates in Texas and dig deeper into all these tips, you can find all the source material and data tables for this explainer at myfinancialprograms.com. We've linked it right below for you. Thanks for watching.